The EFINA podcast.
Good afternoon, everyone. Welcome to the EFINA podcast series. My name is Emmanuel Umukuru, and on today's episode 8, we're going to be discussing an interesting topic: credit literacy, personal finance, and financial health. This episode is in 2 parts, part 1 and part 2. I have with me in the studio a very interesting personality who has worked in the credit space for over 20 years. And he will be sharing some great insight with us on what the concept of credit literacy, personal finance, and financial health really is. I think in today's conversation, we really want to explore the interlinkages of these 3 concepts and see how that can help us drive development, at the individual level and even at the broader economy. The EFINA podcast is brought to you by EFINA. Here we discuss issues that are very topical and are germane, and that we consider very, very critical to the development of our economy. In an economy where everyone benefits, everyone grows together. Welcome once more again. Let me go to my guest. As I said, he's worked in this space for a very long time. Since I've known him, he's been a credit expert. He's worked in the local market, he's worked in the African context, and he's worked at the international level. He's no other person than Mr. Jerry Osagie. Welcome, Jerry.
Thank you very much, Emmanuel. It's nice to be with you today.
Great.
And I think this is quite interesting, I must say.
Yeah. So because Jerry is an expert in this field, right? I'm not going to play a script. So I will just allow a free flow conversation.
Thank you very much, Emmanuel. It's nice to be on set with you to discuss credit literacy, financial health, and I've worked financial literacy. I think it's something that Nigerians, Africa as a whole, and the entire world needs, not only now, but to have a sustainable future. Yeah. So I'm glad to be with you in the studio today. Thank you.
Thank you, Jerry. Just some stats that are very troubling to me will be that only about 36.6% of Nigerians are covered by credit bureaus. And that tells something about credit decision making, right? In terms of how do we lend, how do we score people, whether they really deserve credit or, the parameters that help us in decision making. About 70% of Nigerians are actually financially healthy. That's also a problem. Anecdotal evidence also shows that lenders are more focused on marketing products than actually, creating credit that are really consumer-centric. So it's like an all-commerce market because we have target to meet. Flipping this back to you, please. The whole concept of credit literacy, what does it really mean? And why is it important in today's market?
Thank you very much. Basically, credit literacy for me, I call it being aware of leverage.
Okay.
And I don't just want to say being aware of leverage alone, being aware of responsible leverage. Okay. In terms of, I don't want to use some deep words or financial technicalities here, just mitigating your well-being, because just having a simple insurance, no matter the grade of that insurance, can actually save you. You have a small, maybe issue, health challenge, you can actually approach your healthcare provider and of course get treatment. But if you don't do that and you go at a later date, it can skyrocket into something else that even the money you have in the bank will not be able to sustain you.
When you started, you said you're not going to use technicalities, right? Some big grammar.
Yeah.
What does leverage really mean to the market woman?
Leverage is just taking an advantage.
Oh, great.
I'm here, I just want to go.
All right.
So I see money, and that money, I can't take that advantage of bringing that money close to me and achieving what I want to do at that particular point in time and returning it back. So it gives me a lever, to take advantage at that point in time.
Okay, thank you. Let's try and unbundle some things, right? So if I am a would-be borrower, right? I want to borrow someday. I have some projects, to run, pay for education, pay for health, expand business and all of that. Is it really so much to be bothered beyond this is the amount I want to borrow, this is the institution that can borrow me. This is the rate in terms of the interest, right? And lastly, this is the repayment date. Are those not just sufficient for me?
It's not sufficient for you. So let me say, in some of my, the information I have out there, some of the books I've published, and in my experience in the industry, it goes beyond you just saying, this is the amount I want to borrow. Fine. This is how long I want to pay that particular money. A couple of maybe weeks or months ago, I was speaking to someone and he took a loan. And the moment you take that particular loan, they take a 40% interest from you upfront. I'm talking a loan of 7 figures.
Really?
And they take 40% and say that is the interest. And the loan is supposed to be like how many few months? And they're going to be paying 40%. Now, when you repay, in an attempt to repay this loan, because it's not easy, they said, okay, we give you another loan to be able to repay the loan in 2 months' time. So let's assume that the loan is 3 million naira. They take 40%. What is 40% of 3 million?
The 2 million or thereabouts?
About
1.2
or thereabout 1.2 million naira.
40%.
They take that immediately. And you are now supposed to pay 3 million in the next 1 month or 2 months. They know you don't have it. They say, okay, you're actually supposed to pay us the 3 million then. Okay, not a problem. The 3 million, we will lend you. If they're lending you the other 3 million, they've taken another. So they expect you to take about 4.5 or 5 million so that you can pay the 3 million and they take another 45%. And I say, you know what? You are not going to respond to them again if they are going to publish your name and your problem. Because you know what? These are gone beyond loan sharks. They are assassins. As an individual borrower, we've not talked about the business borrower.
No.
Because there's a lot to unpack there.
Okay, let's stick with the individual before we come back to the business borrower. When you then look at now the scenario you painted, right? Is it entirely the consumer problem, the borrower problem?
No.
Does credit literacy also apply to the lender as well?
Absolutely.
Could you share some insights?
You see, you said something earlier. Because of the pressure for target to meet performance, given a lot of financial institutions do train their staff because training is important, right? But the more you have a lot of staff turnover,
true,
the more you have labor shortage, the level at which they train is a reduction because as people are leaving, you need to catch up. That's one. Now, when you keep putting pressure on people, even the staff that are trained, they will start, using their skill in another way that, okay, for me to meet the target, I know I've been trained, I understand, but man, I just have to go and look for somebody to take this loan. And in that way, you will see some of them even manipulate a prospective borrower to take a credit that they know that credit could be detrimental to that person. So the financial service provider also have a role to play. Increasing, number one, the training of their staff, enforcing discipline as well as compliance. Compliance within and say, there is a loan. Yes, you must meet your target, but you must meet your target responsibly. Enforcing credit education. There's a couple of countries, if you look at them before you take mortgage especially, they have to sit you down and say, for me, I think it goes beyond mortgage. Everything around both investing, taking credit, insurance, all the spectrum of finance, you need an education, which is very important. And that education must be tailored. So the way you are going to educate somebody that is literate is different from the way you are going to, informal guys who are in the market. The engagement has to be different. It has to be tailored. then a lot of examples that you give to them. When they relate, then you will see that there will be a difference.
Let me quickly follow up on that. So there is responsible lending, right? And when you then look at the dynamics, there are people who want to borrow. The lender also has a responsibility to lend because the regulator gives the mandate. You have a loan to deposit ratio as one of the measurements of how well you're performing and you're meeting compliance. However, in as much as some people want to borrow, there are some who do not want to borrow at all.
Agreed.
Is it because of lack of literacy? Because they tell you, I'll stay within my means, right? But we understand from research, from evidence that credit can actually aid development.
Of course.
It leads to long-term development outcome. You could borrow to finance education, finance health, finance different things. So it's not as though consumer credit is bad in itself. Consumer credit has a role to play in the economy as well. Why do people shy away from borrowing? Is it a problem that is you can link to lack of credit literacy, or is just the right thing to do?
Okay, I mean, it's multidimensional. I can tell you. So some are cultural. You see some people and said, my lineage, I've never borrowed before. I will never borrow. Some is religious. A borrower is slave to the lender. In some cases, so I said, I'm not going to borrow. Some are risk averse. They don't even want trouble.
Well, no one wants trouble.
So because some people tell you that some people prefer, give me the money, don't lend me the money. But because some people don't want to take responsibility. That's another dimension. Then there's the others, credit literacy. Another set of people had an experience that was not palatable in the past, or someone they know or within their family had a bad experience. So when you have different, kinds of people, you have issues coming out and say, I don't want to borrow.
Interesting. So in as much as multidimensional, there's religion, there is, culture, there is, the risk appetite itself. There's the lack of the awareness, which credit illiteracy, as you've rightly painted. Yet there is the risk also of not progressing in life because your income as it is not able to push you far, right? How do we address
awesome
issues?
Credit is sometimes not taking credit in a country can also fuel corruption.
Explain.
So for instance, a lot of people in a country that doesn't appreciate credit, everybody want to buy the whole stuff cash. I recognize that anything you cannot buy twice or 3 times, don't bother, cash. I mean, we say that a lot. Yes, it's good. But sometimes responsible credit, a lot of time, has a way of energizing and charging up the economy of a nation. So take, for instance, look at its value chain. You get a salary. There's household equipment, right? Or there's a car. You can actually get, instead of having to take the whole of 10 million that you have saved or you don't have and take from people and say, take, I want this car. You can actually put 20% of that one down if you have a good interest rate and spread for the next 5 years. If you get a raise and increase between that time, you can actually pay them down, keep increasing your repayment.
Yeah.
So that now you have the opportunity to spread so that particular money, you can use it for something else. You can even take the 8 million that we have and put it in a high yield, investment. And from what you're getting, you can actually be subsidizing your repayment here. Do you understand? And of course, it looks like a kind of saving or discipline when you have to be paying from your salary over the next 5 years. That is one. Now, once you do that, there is a particular company who is either assembling that car. You are also putting money in that company. It's creating productivity in that company, generating employment for that company. Each person, by standard, supports like 4 to 6 people. That's per household. What you're doing, you don't know. In your little corner, you bought a car, but the car is supporting a particular company who employs maybe 50 to 100 or 200 people, and each of these persons actually supports an average of 4 people. You see the ripple effect.
Yeah.
Do you understand? Now, this particular company, when they are buying other ancillary parts, all those things they are supplying, other supply chains are also being supported. They too, they get credit to be able to produce those vehicles. Do you understand the idea? That what happened is productivity. It also affects the financial institution.
True.
Who also have staff, who also have people who are dependent on them. So you're looking at that. Then there's a tax implication that puts money in the hands of the government. And a responsible government puts the money back in the economy. So it goes round and round, and each becomes an actor within the value chain of the consumer credit value chain.
Sure.
Then everyone benefits. The credit bureau provider, it's on one hand providing services, and everyone is paying the moment they access those things. And they are also being paid, and people work for them. Do you understand?
Yeah.
Everybody who provides something, the technology providers are there. So when credit happens responsibly, and there are structures and there are framework, everybody benefits, and the economy also benefit. That is one thing. But mark my word, responsibly. That is very, very important.
Let's look at the emerging markets, and I want to use Nigeria, Kenya. Let me stick to these 2 markets, for instance. We have pretty well done well, right? Kenya with M-Pesa have been doing consumer lending for quite some time. Nigeria here, we see the rise of, mobile apps that have not democratized access to credit.
Yeah.
It's good, it's welcome, but there is the offside to it.
I agree.
People are becoming over leveraged on one end, and the mechanisms for repayment or for recollection of loans are sometimes grievous to see, right? And leaving a lot of persons go into mental trauma, psychological trauma, and emotional. How do we deal with the menace of the rise of credit? It's not the rise of digital lending in itself is not the problem, but right, when you then look at the practices that are associated, one then begins to ask, are we heading in the right direction? How do we deal with the whole issue of social shaming, for instance? Because when you talked about the factors that make people not to borrow, these were some of them were cultural,
yes,
right, psychological. And I like that part that you mentioned. Nobody in my family has ever, borrowed.
Yeah,
I think that is that's a good legacy. The way it sounds anyway, right?
I tell you that nobody has ever borrowed in my family, so I'm not going to borrow. And
so 2 things for me. First, how do we deal with the unwholesome practices associated with the rise of digital lending? That's number 1. Number 2 is then how do we then tie this to, how does this impact financial health of the everyday Nigerian, of businesses? You don't want to borrow, it's your decision anyway, but is there an implication for financial health?
Yeah, there are implications, but let's take, for me, if purpose is not defined, abuse is inevitable. One thing I always tell people, if you want to borrow, why do you want to borrow? I'm going to come to the area of those irresponsible lenders.
Yeah.
I'm going to come because if I had the opportunity, a couple of them has to be in jail. I can tell you that. I'm very blunt because a few years ago, I was implementing a program, and I was also trying to understand and see how people, in the credit space, I was looking, and I made a pronouncement. I was like, 4 or 5 years time, we probably need, you see a lot of rise. There should be rise in credit repair companies. We don't have a lot of that in Nigeria, but ideally, that is what should be happening now because a lot of people borrow for the wrong reason. Majority or a substantial percentage of those who borrow, might not be, but at least a substantial percentage, up to maybe 20% or more, I don't have that data, actually borrow to play betting on those apps. It's one of the biggest menace now. People borrowing from one app to move to the other because you want to play betting, you want to do this, and I will win. There's this stuff, I will win the next thing, you run to the other one. That is on its own. That's irresponsible borrowing, right? However, let's go to the lenders we're talking about. Is that the best way? What is the motive for some of those lenders, behaving in such a way that a single lender will have about 30 apps with irresponsible behaviors? As government also is shutting down one, they open another one. Some of them are foreigners. Come to countries like Nigeria and Kenya, Uganda, you see that a couple of governments are banning some of those stuff and putting exorbitant interest rate. Some telling you that 30%, 60% per month flat, and 60 times 12 APR of 720. You remember there was a time that, if the FCCP had to tell Google Play Store will be looking at your rate and say, take this one out. They found another way to do all those things. You get the idea. Some will tell you as you repay, will reduce the interest. Some has been there for the 3 years. So, number one, the motive of this lender is to actually tie down people that they know that they are perpetual borrowers who will default and go. They're excited about it. They themselves, they are not responsible lenders. So, number one, regulations. That's one. Number two, there has to be consequence. So there will be deterrent. There are some things you shouldn't do at all as a lender. And that is why there's institutional governance, there's compliance, there's discipline. When an institution have the governance and say, this is the people we are going to lend to. These are the type of people we must lend to. This is how we want to conduct our business. Yes. Ethically, we'll do this. At this point, we are not going to do this. Let people say, oh, they are not giving me money. Yeah, go out there and tell them we're not giving you money. We'll beat our chest and say we're not going to give you money. Because you don't even have enemies to pay us. But these people know, you say, let's do another one. So, lenders has to be responsible. Those irresponsible lenders, they have to be jailed. I had to use that word, jailed. A lot of them are not even citizens of the country they go to destroy.
Jerry, lenders have to be responsible. Awesome. Ladies and gentlemen, this concludes part 1 of this conversation on credit literacy, personal finance, and financial health. Let us take a break and we'll come back for part 2 with Mr. Jerry.
The EFINA Podcast.